Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Mathew Owens. He began his career in real estate as a flipper and a licensed CPA. In 2006, he quit his job as a CPA and went into real estate full-time. Over the past 15 years, he successfully flipped over 1,000 single-family properties while lending over $35 million to flippers across the USA. His firm, OCG Properties, has raised over $150 million in private investors' capital, and they currently own over 1,500 units across the country. Their company's investments include syndicated investments, performing and non-performing notes, single-family and multifamily properties for both flipping, holding, and private lending. So thank you so much for coming on the show today.
Thanks, man. Appreciate it. Look forward to adding some value here.
So you started off as a CPA. Can you give us a little bit about yourself, both personally and professionally, prior to going in real estate full-time?
Yeah, no problem. I just to give you a little background, I grew up in Torrance, California, went to UC Santa Barbara, which is a major party school, of course, and I actually wanted to become an architect at first, and my dad was like, "Hey, what do you want to do?" And he was a CPA, and I said, "Well, they don't have architecture school here, so I'm just going to do accounting and become a CPA." And he's like, "Well, why don't you just go to another school?" And I was like, "There's too many girls here. I can't actually leave this school." And he's like, "You're going to make your professional, your profession after you wanting to stay at a school for girls." I'm like 18 years old, 19 years old, like, yeah, of course, and so from that point forward, I actually started studying accounting, graduated, got my CPA license, worked at multiple accounting firms doing audit and tax, and really working on a lot of multifamily assets that were getting government subsidy and needed audits done on those multifamilies. And so I got to see a lot of the inner workings of the property management function, the operations on the back end of multifamily, as well as seeing the real numbers on how this was playing out in the profitability. I probably knew a lot less about what I was really looking at then, but it kind of stuck with me on that side, on the math side of this. And I worked for some smaller firms, getting to see the inner workings of internal controls of different companies and stuff like that, and the accounting side, and realizing that's kind of the backbone to business. At the same time, I was bored out of my mind going, I can't do this anymore. It's just so painful. I wanted to cry on the way to work going, I cannot do this auditing stuff anymore. It's like the worst thing on the planet, right? And so I was looking for something else. I didn't know what to do. I was like, should I start a bar? Should I start another business? What the heck? I don't know how to make money other than get a job, go to school. And I ended up, like every other real estate investor, read Rich Dad Poor Dad and was like, oh my God, I'm making the wrong type of money. Like, this is insane. And I ended up taking some real estate classes and ended up quitting my job when I got my first flip under contract that I thought I was going to make 30 grand. I ended up making 20 grand. Thank God I didn't lose money, because most people in the beginning do lose money. And that's when it all started. And that was in 2006. And then, of course, we started flipping houses really fast. We got an office at the World Trade Center in Long Beach on the 23rd floor. Myself and my two stepbrothers that were computer programmers and electrical engineers both quit their jobs to go into real estate too at the same time. So it was a fun journey until, and I thought I was a real estate genius until, of course, the market, in 2007, 8 happened. And so I realized I was only a genius for about a year and a half, right? And then realized I don't know crap about actual investing and running a business and things like that. And hunkered down, took out 200 grand of my credit cards to pay some investors back. And then I lost everything at that time. Just kept grinding and finding ways of joint venturing with investors and partnering with them. After I took that hit for them, they all reinvested with me on different flips and things like that, now that the market had kind of taken a dump, and really just a major head dive because of a lack of liquidity in that market, of course, that occurred for at least the first 6 to 8 months of that market cycle when everything hit the fan, right? So seeing that aspect of things really taught me a lot about standing back up after taking a punch in the face and pushing forward and grinding. And that grit is really what makes you successful in this business, right? So, and you can imagine the headaches I have gone through after flipping over 1,000 houses now, and the brain damage that comes with that kind of a business, of course. So that's the back.
Yeah, no, I appreciate that. Sorry to cut you off there. When you were doing that, tell us a little bit about your team. I mean, 1,000 houses doing that. It's one of the things that I always like with people that have done some scale with a business, kind of how you had that structure to be able to do that.
So at first it was a small outfit. We're doing, a couple of months, type of thing where we were buying them and renovating them and tenanting them. We had, contractors on deck. We had property managers on deck. We had, the system and the team set up from that perspective. perspective with realtors, and we would buy them, we would renovate them, and we would tenant them. And I lived in Southern California. We did an analysis on all these different markets around the country, and we did all these different flips out in Memphis, Tennessee, Indianapolis, Indiana, Atlanta, Georgia areas, and, really with a hub out in the Tennessee markets. And it really started small, and it started escalating from there to where we needed our own rehab management team on the ground consistently, full time versus paying somebody outside to manage these different projects, right? And then, of course, we brought in property management in-house also onto that, which is a whole nother business. I highly recommend against doing something like that. You're just like, here's 1,000 problems to deal with right now every day, right? So it's not a fun business, property management, of course, and we sold that company because it was just I could make the same amount of money or off of the business by selling it that I could just running it myself and getting rid of all those problems to focus on more income generating items, right? So you have to kind of internalize and have full-time team members on the property management side, on the construction side, on the realtor side, the analysis side, and then you have a big marketing system that goes with that too, where you're doing pay-by-click marketing, you're doing direct mail marketing, you're doing relationship marketing with wholesalers, you're driving for dollars, you're doing every marketing strategy and spending probably $150,000 a year at least on marketing costs to be able to do 5 to 10 of these a month, every month, consistently. And so, it's very profitable, but I really wish I wouldn't have sold all those houses, because at the end of the day, if I look back at the valuations of those things versus now, if I would have just understood how to raise capital and hold those things, I'd have an extra $50 million right now in the bank instead of selling all those houses, right? So I'm thinking that I had to go through and sell them to keep the lights on somehow. And there's totally different structures to do all that you want to do in this space.
Yeah. The property management is something, when I hear groups that have brought the property management in-house, it is a very low margin, thankless business, and it's very difficult. I self-managed properties, my small portfolio for years when I started, like 06 to 2012. And when I handed that off, it was like a sigh of relief, and it allows you to really grow your portfolio, grow your real estate investment business. And for people taking a house, I understand you get a little bit more of control, but it's also, just because you're good at acquiring properties doesn't mean you're good at property management. I mean, they're two separate, things.
The management company we sold to, they could get their costs down by 30% on our renovation costs, because they were much bigger, had in-house systems, in-house trucks, in-house team members, all that kind of stuff from the property management side versus going outside subs and things like that, right? And then, if something happens where you mess up as a company from a property management side and you're managing an investor's property, then a lot of times the manager is going to take the hit. People don't talk about those types of things that can occur, right? If you make a mistake as a company or as a whole, right? And so it's not all profitability, in that way, right? And one side, the owners don't like you, and the other side, the tenants don't like you. You're kind of right in the middle of this war between the two. I told my team that was on the ground, hey, just blame the California office, and every time you have to deal with something, so that way they're not taking the brunt of the hate from tenants that are getting evicted or owners that are mad about a repair or something like that. You know what I mean?
Yeah. Yeah, that makes perfect sense. I also found you're taking away the emotional element of it. So if you're self-managing properties, it usually happens with like mom and pops. They want to fill up that vacancy, and you know what I mean? And they're going to bend the rules a little bit than they should be, right? And they know they should be. You shouldn't be doing that. And it's something that that's one part of it. And the other thing too is you're paying for the experience of the property manager. So I had my first property manager, probably was in a market for 25 years before I hired him, maybe 25 or 30 years. So I'm tapping into 30 years of his connections, his know-how, everything like that, to be able to manage my own properties, right? And that's an added benefit that's not put on like line items of what they're going to be offering to you. You know what I mean? And so there's a lot of pros. I mean, I understand about if you have a small portfolio that's really close to each other, you know what I mean?
Yeah.
And you have good contacts, it's easier. But when you get into bigger ones, if you're really in that acquisition mode, I think it's really smart to bring on a third party manager and take that off your plate. But
I think it's good to maybe manage a house or manage a couple houses or something like that, to learn what makes a good or bad property manager, to ask those right questions of that outside team member. But the goal as a real estate investor is to be own things passively, get cash flow coming in every single month, and not have to do the workload involved. And a lot of different real estate investors out there, they think in their head, or people that are just new to real estate think, I got to flip a house, or I got to buy a rental on my own, or I got to do this all by myself. And really, there's so many other ways of investing. You should be investing just like you would with a good property management company and learning off of them. You can invest with multifamily operators, short-term rental operators, single-family operators, promissory note operators. There's so many different aspects of this, and rely on their experience to do all that work and get you through that learning curve way faster, where you don't even have to qualify for the financing yourself. They do all that stuff. There's no extra risk on the board in like a syndication deal. That doesn't mean that at the same time they shouldn't go do their own homework as well, and do a deal on their own to learn how to renovate a house or how to do a short-term rental, or those different aspects of things, because you gain so much knowledge on what makes a good or bad operator too when you're investing with someone else on those deals. So all these things are kind of full circle. You should do a little bit of active, but the goal is that passive side, right? So
yeah, well, you understand exactly what's happening, like you said, and then it's going to make you a much more well-informed, active and passive investor in the future, and you really get that mastery.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners, and since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
Matthew, can you give us an overview of your company's investment strategy? I mean, you guys have different asset classes that you focus on. Can you give us an overview of what you guys are working on and kind of what your role within that is?
Yeah, no problem. So I'm the visionary, as they say in the book Traction, right? So I also still do a lot of operational work and things like that. I'm still a smaller company as well, and still learning to delegate, of course, to every aspect of my team. It's hard for me. I love financial analysis. That's my superpower. I have two 47-inch wide monitors behind me that for financial analysis, that's like what every CPA loves, right? But what we typically do, what we've done as far as our bread and butter goes for 18 plus years, is we buy a lot of single family homes in multiple markets, renovate them, tenant them, and either hold them via joint ventures or with our own capital. And then a lot of times we'll sell them in packages to 1031 exchange investors, to people's IRAs and 401ks. We've sold over 400 houses to international investors in Japan and China, and have raised over $50 million from that market as well. And so we have translators set up and things like that. And so we understand the international tax side of this. And so we have that business that we continually do, or we're slowing down on it because single family home investing is just from the bang for your buck for larger deals. It makes a lot more sense doing the other projects. The individual renovation management on that kind of project is significant. We also set up and do short-term rentals on that side with very big houses where we're putting shipping container pools in, we're putting murals in, we're putting full gyms and saunas and ice baths and stuff like that in these things. So we have that business. We're actually starting a fund right now for our short-term rental business as well. We're raising about $5.5 million for that project. I also couple that with a lot of mobile home investing and debt investing, where we invest in a lot of mobile home parks because the value add aspect of that is significant, where you can add new homes to parks, as well as you can renovate down units and significantly, increase that value, especially if you're doing utility reimbursement programs and stuff like that in place. There's a little bit more value add than in a multifamily type asset. And it depends on the asset, of course. There's some great value add projects that I invest in on the multifamily side too. And so that's the real estate side that we focus on. And then we have the debt side of things that we do. I lend money to flippers in different markets around the country. And then we also go through and do different projects like debt invalidation, where we're helping people and invalidate their credit card debt. And we have discount programs put together for active duty military and military vets and other first responders to where they can invalidate their credit card debt and get it off their books. And we invest into those opportunities. And we're basically doing accounts receivable financing on these giant pools of receivables. So it's a different strategy than the hard money lending, but it's also debt. And we're looking at our collateral to value in those types of investments. So we do a number of things. We do mobile home park lending as well. And so our mobile homes lending to specific park owners and operators that we know and trust as well. So a number of strategies. And I like the debt side along with the equity side of these deals, because when you're investing in real estate, you get the tax benefits, you get to go through and get wealth building aspects of this where you're doing value add. You can get cash flow along with that equity build too. There's a lot of other benefits associated with that, right? And on the lending side, you're getting consistent cash flow streams coming in, every quarter, every month on that lending side to cover your monthly expenses that are, more of a cash flow play than necessarily real estate in the very beginning. When you're doing a major value add, usually the cash flow is a little lower. So it depends on what your interest is. We have investors that are traveling the world on their promissory note debt right now and could care less about investing in real estate, but these strategies I think are important to utilize to be able to take control of your financial future and be able to make enough money to keep up with inflation and cover all your expenses, right? So that's the strategy, right?
Yeah, it's great. You guys are involved with a number of different asset classes. How does that work with the team that you have? I mean, what kind of team have you put together to manage? I mean, there's almost a dozen different asset classes there and strategies.
Absolutely. And it's not easy, right? So we have technology we're utilizing. We have systems in place. A lot of my guys that work for me, guys and girls that work for me are financial minds, right? They deal with the back end side of things where they're engineers and other finance professionals and stuff like that have graduated in finance and have that kind of mindset where they're looking at the back end of this from the technology side. How can we leverage technology to automate things? How can we leverage different team members? Like we have a marketing team member, for example, that we have a couple of people that help us consistently on that with our content distribution strategies, because we're consistently raising capital for projects. So you have to consistently go out on the marketing side and do that. We have multiple sales team members and investment managers that help with coordination with our investors consistently and help bring in close the deals and get the funds in the door and close with all the backup paperwork that goes into that, right? This is just on the investor capital raise side, the marketing piece, the sales piece associated with that. And then you have quarterly reporting that has to be done on those types of deals too. And so having the back end admin infrastructure is key. And then we also have operational teams. So we utilize Monday.com, for example, for a lot of our different, operations where we're looking at, every single asset that we own has checklists with it, has systems and processes with it, with rehab management aspects of it, and the primary asset management strategies that we have to use and metrics and KPIs we have to hit for that particular project. A lot of them are duplicatable, especially if you're dealing with single families. And so you have a lot of tech that you manage along with different team members. So we have probably about 10 team members that are internal team members that we utilize, and the rest are external team members on the grounds in these markets or partners that we're working with, where we manage the CFO function, manage the capital aspect of this, and make sure that everything is getting done on the asset management side of this from an operations standpoint, while we leverage the teams on the grounds to do the hard work, swinging the hammers and, construction management teams and stuff like that on the grounds in these different markets. Make sense?
Yeah, it makes perfect sense. What would be, for new investors starting out and maybe they're starting off with a few properties and it's that time to start taking things off their plate, what advice would you give business owners and investors who are looking at hiring a team and starting from the ground up there?
So first, you have to know what questions to ask, right? What makes a good property manager? What makes a good contractor? What makes a good realtor? And what makes a good construction manager that's going to manage multiple projects, right? And so you're looking for the key attributes associated with those different positions, right? Like a construction manager that's managing multiple pieces of construction needs to understand construction, understand spreadsheets, and understand how to manage a budget correctly, which is not very common in the construction space, you know? So, and we can all laugh about this, but we've all been stolen from contractors in the past, right? And so whether that's labor or problems or just downright theft, right? And so looking at from that aspect, you have to understand, hey, what are the key things that person is going to have to do for me? So outlining every piece of the construction management process and saying, do they need to know? What do they need to know? They need to be able to create these bids, know the cost, both labor and material, negotiate with contractors, or if you have it in-house, having the right people that they're managing, right? So each position comes with that aspect. If they're a brand new investor, get referrals from other people to be able to do this. Ask them why they think they're good team members, because not every referral should be weighted equally. You know, some investors don't have the right experience to know if they have a good property manager or not, for example, right? So finding the people that do have that experience, that have referrals and recommendations in those areas is the best way to go to start building your team. And then knowing, hey, how does the property manager make money? How many ways are they making money? Is it repairs markups? Is it leasing fees? Is it, acquisition fees? Is it lease renewal fees? What are all the ways, and are they aligned with your interests, right? Do they get paid whether it's rented or not, right? So these are the questions you want to be asking these different team members to understand. We have some of these checklists in one of the classes I teach that I can give away to the audience if they want it. They can reach us at MathewOwens.com if they have that interest. But I think the piece of it that most people don't understand is that when building the team, you have to know what those skill sets are to make a good team member. And if you don't, you got to find somebody who knows that already. They can give you a referral, right? So that's the key to the whole thing. And most people don't have the accounting side dialed in, which being a CPA, I understand more than most. And it's a very hard thing. I remember about 5 years ago, I was working with a flipper that he just wanted me to review his financials with him, right? To help him understand them better. And this guy was flipping like 5-10 houses a month. And he sits down with me and he's like, what, I don't understand why these things are still on my balance sheet here, these properties. He's like, I sold them last year. I'm like, well, you just paid a lot more money in taxes than you should have because you didn't write those items off of your return, right? Having the right accounting understanding, as well as processes and procedures for good accounting and good budgeting, payment control, controlling reviewing process on deals and things like that. And those quality control procedures are key for your success as a real estate investor. And if you don't know that side, get that dialed in on your first deal. Like, work really hard to get that budget in place. And how are you going to track this and not pay all the contractor too much money up front, for example? And how do you have those proper protection things put in place?
No, that's a lot of great information. I remember years back when I hired our first bookkeeper for another business that we use for everything there. And it's a game changer. I mean, it just makes it so much easier. And then you're just going back and asking questions about a balance sheet, about something that's already been put together. And you can, that's how it is now. Hey, why is this? What is this? And they explain to you, or they make a change or whatever it might be. But it allows you to really know your numbers. But since you brought it up, I mean, what are some suggestions for real estate investors as they set up their bookkeeping? Is it get a bookkeeper as soon as possible, part-time, maybe someone like a virtual bookkeeper, hiring an accountant? I always feel that especially anybody within entrepreneurship or real estate, should have an accountant. But what else would you say? I mean, what are some easy ways for people to bring on a bookkeeper initially?
So there is a ton of good people overseas that you can get work from in, VAs in the Philippines and things like that. I would highly recommend, if you're going to go that route, that you should find a company that's already vetted these people and work through a company. You're going to pay a little more, but they have controls in place where you do 3 interviews with people and understand their expertise. Now, if you don't know bookkeeping and understand that yet, then you should have somebody else doing that interview to understand those things. And you should test them always, where they do a month's worth of books as a test and have them explain to you the transactions that occurred, and have somebody else that understands that reviewing their work. Because if you don't have the knowledge, how are you going to know what their workload, if their workload is right or wrong? And that's the biggest challenge, right? A lot of people have no idea that their bookkeeper sucks. You might be spending a ton of money and they're horrible and they're just destroying your books, right? And especially in complex transactions, if you start getting the seller financing or wraparound mortgages or syndication investing where you have multiple investors involved in distributions, you have to have a bookkeeper that understands that type of stuff. And if they don't, then you have to have a higher level person like a CPA setting it up right. So then that way that bookkeeper has, can do the actual data entry aspect of this, and then having a review process in place with a higher level person that's reviewing it to make sure it's right. Where they're, maybe you pay them $500 a month or $250 a month to do that review on top of that. My wife is a QuickBooks Pro advisor. She's been doing our stuff for years, and we basically utilize her quite a bit from their higher level review process over other bookkeepers that we have in place for this specific purpose. And she helping a lot with like mobile home parks where you have lot rent, you have home rent, you have utility reimbursements, you have all different types of income and expenses that go along with that. And that's major renovations that you don't want to show as part of normal operations and things like that. So there's some unique details that go into understanding these books in the first place. So you want to have a higher level person that understands that investment type, which is a rarity in a lot of cases. And so getting referrals can be really, really important in that arena.
Yeah, no, that's a great idea for as you grow to have a kind of a bookkeeper for your bookkeeper, as I would say. And that's something great. That's something that I've heard people have before. And usually working with an accountant, I remember we had a bookkeeper years back, and our accountant used to charge us more because they had to fix the books. And after one time, it's like, oh my, you have to change it. It's just, so you have to really, there's no way of me knowing that until, you're going through and you're speaking to your accountant, going through everything. So,
and then fixing the books is not an easy feat at all. Like, so it can be really, especially if they don't understand the business or all the things that are happening, or there's missing information about invoices and things like that. It's really hard to recreate if you don't understand or have the right people in place to do that. And this is what I love about my wife. We met at my old CPA firm, and she was doing the accounting work for the CPA firm. We got trained by the CPAs on the right way to do that stuff. And so then I quit and went into real estate and told everybody we were dating. And they're like, what's wrong with you? You're dating Matt, Now we have 2 kids, and, I have a 6-year-old and a 9-year-old, and I'm teaching them. They love math already, of course. So I got the little entrepreneurs going here. So
no, that's great to hear. So after raising over $150 million from private investors, what have you found to be some of the most effective methods for reaching new investors and then also educating them, preparing them to invest into some of your deals?
Gotcha. So this is a very big loaded question, right? Bring in investors to the table. There's so many strategies to utilize. I'll just pick a few of them that I think are really valuable and important to the capital raise process. And you want to be able to look at this as a process, as a big picture, and saying, okay, what's the best way I can be a resource and helpful and educate my clients in all these different ways about the different investments that I do to attract more. One, referrals, right? Actually reaching out for referrals to other people is a huge way to do that. 2, going to live events. In the very beginning of my career, I was going to 4 to 5 networking events every single week for 2 to 3 years, every week, getting people's information, going through and trying to add value to them in different ways and finding ways of helping everybody else, right? Without asking for anything in return. And what happens is it starts snowballing towards you. People start to trust you because you're helping them in these ways. And sometimes it's 6 years later, they refer you someone because you helped somebody and had no idea that you helped them in that way, right? So going out to these live events, it actually pushes the relationship forward at an exponential pace comparatively to online events or online meeting somebody or over a Zoom meeting or something along those lines. You actually get to that point of trust way faster because no one will invest with you without building the trust. And so you have to add value and many times realize that a new lead that comes into your database that might be a interested investor in working with you, they may take 6 months to 2 years to invest with you. It is a long nurturing process, right? And so they're going to forget about you if you're not consistently coming out with content, you're not consistently emailing them. And so we have a system where we do an email marketing system where every new lead that comes into the database, They get on a welcome series of emails. Here's 4 emails about who we are and what we do as a company. And then we also send out weekly newsletters. I do a weekly email from me personally about my personal life because people want to get to know you. If they don't know you and like you and trust you, they're not going to invest with you, period, right? And so doing those things about showing who you are as a person is super important to be vulnerable because people have already gone through the pain you've gone through for sure. So people are going to relate to you as well in that arena. So having a good email marketing system and database capture system where every single person you meet goes into your database, gets into the system that you can continually nurture long-term. And then what we do is we do an email launch to a live deal where here's 3 emails on education about that type of deal. Here's 3 more emails or 4 emails on a launch to a live webinar about that deal. Here's 3 more emails about a follow-up to that webinar. And then here's a final call email series as well saying, hey, you guys are going to miss out. You guys are going to, you want to get involved. You better do it right now. It's going to be full soon, etc. Right? And so having that sequence go out along with your weekly emails, along with your welcome series is kind of the key there. And then you have to make sure you're doing the follow-up and the sales piece. None of this crap matters at all if you're not following up with people and having them in a system where you're dragging and dropping them into different categories and following up consistently with them on and if you don't respond right away to people's emails, they're building the trust through those emails. If you wait a week before you get back to them on something, which is hard sometimes if you're super busy and an operator, then you should be able to go through and get back to them right away because they're looking at every instance of communication as trust building. If you respond same day, same hour, they're like, wow, they're just getting back to me. They really care, type of thing, right? And so you also have to not need the money. Investors can smell it on you when you're desperate for the money. And so you have to honestly not care whether that particular individual invests or not in your deal. Yes, you want them to, but you have to do what's right for them at all times, no matter what. And so that's really, really key in being able to raise capital. So I talked about the marketing aspect, the sales aspect, and there's a ton of other aspects. Nurturing your current investors that have already invested with you is a huge one. Having consistent content that you're coming out with to teach the audiences and different people that want to follow you is very, very important because they get to know who you are. So all these things are part of that process on raising capital and how we've been able to raise over 150 million now over the last 18 years and really just getting started in this space massively because I stopped raising for a while when I didn't need the capital anymore through my own means. So now we're focused on it as a business strategy as well, which is huge.
Yeah, that's a lot of great information, Matthew. Thank you. As we're kind of wrapping up here, you're a CPA, you're a real estate investor on both the equity and the debt side on many different asset classes. You also, speak to new investors and help educate them. What are common mistakes you see real estate investors make, whether they're new or maybe experienced investors make as well?
So first, understanding all the moving parts of operations and understanding what due diligence to do in the first place. Many investors skip the due diligence process and they base it purely off of trust. And that's investors and other operators that are raising capital for other people and things like that, right? And so they don't do all that homework that they should be doing on the operator, the deal in itself and the financial model, the legal documents, the legalities of them raising capital or being able to invest in the first place and what their rights are, the market that they invest in. So we have a 200-point due diligence checklist that we utilize. Again, it's on our website, MathewOwens.com. We have it free for people and you can download that as a starting point. And that is super important just to ask these questions. That's one of the biggest things people don't do is understand that. It's hard enough to make a good deal work with a good operator that someone's honest because there's so many changes in the market that occur, right? I think deals could go bad sometimes, right? Versus someone that's a criminal or something like that, where obviously it's stacked against you. But the operator is the key to the whole thing. And so focusing on that operator, on what trials and tribulations and experience they've had in the past is the most important piece to that puzzle. So that homework on that operator is probably the biggest mistake I see people make on doing this. And, if they're being active on that side, I'd say it's really not having enough capital or understanding the math on their deal and pushing numbers to make things work because they really want that deal to work. Don't push your numbers. Have extra reserves. Be extra conservative and just wait for the right deal and get out there and find more deals and get in front of more deals till you find the right ones. Don't fudge the numbers and make something work. Guaranteed your renovation is going to be more. Guaranteed your market value is probably going to be wrong. If it's wrong by 10%, you better build that into your scenario. If your rehab, I would always put in 25% plus more on the rehab budgets and things like that to make sure you have extra reserves as an operator. So hope that helps.
No, that's a lot of great information there. Yeah, I guess when I look back as you're speaking on deals that I passively invested in, because there's always like people are like, oh, you make sure that the operator is not a criminal, right? You know what I mean? Because that's a whole different ballgame, like you were saying. Right. But the thing is that you have people that get over their skis with what they're doing, or they don't understand what they're working on, or they, like you said, they maybe sharpen that pencil a little bit too much. So it's important that, make sure they're not, a criminal, but then also review each deal that comes out and know that, okay, this person has integrity, but also if the deal goes south, that makes everything much more difficult. So I have to do my deal specific, kind of due diligence as well. And that's one of the things I really focus on when I'm passively investing, because you're like, these are the sponsors that I'm interested in working with, or and then when I'm reviewing deals, I'm doing what I would do if this was a project that I was going to maybe partner on as a general partner, right? That we're going to bring to our investors. It's really like, everything from where it's located, rents, the whole 9 yards, and you kind of underwrite it yourself and go that route. But obviously knowing that sponsor and operator first is number one, because that's, like you said, that's just like a property manager. That's going to make or break the deal before it even begins.
Yeah, and looking at that from, do they have extra liquidity if something goes wrong where they can contribute more capital? How long have they been in that space? And, how many other deals are they doing simultaneously and stuff like that they might need more liquidity for? What if they can't raise all the money on the deal? Does it go bad then, right? And same thing with, is there preferred returns in the deal? Do the investors get paid first before the operators get paid? And, what is the load on that deal? How much are they really making up front? Is it a couple percent or something like that up front on those deals and acquisition type fees or due diligence fees and things like that? And most of it's on the back end, or are they making so much up front that they don't really care about the back end and they're just going to walk, right? So looking at the incentives for performance in those deal structures is super important. I personally won't invest in something does not have like a preferred return involved or something like that, where there's an incentive for performance. I don't want my operators to make a bunch of money if I'm making a 2% return on my money, So
yeah, you don't want them to retire in a deal that hasn't even gone full cycle yet. I understand that totally. There's all these different ways of manipulating these passive investing deals where it can be put in. It can really be put in favor for the syndicator. And obviously you want them to cover their expenses. They're looking at hundreds of deals before they're buying. We know we're on both sides of it, but it's also something that, after you get compensated for that, we want, we should, all the money, the majority of that upside should be, like you said, should be in the carry, should be at the end once we've brought that deal full circle. And once our investors have been paid, paid their return and their preferred, and then we get the share in that.
Right. Absolutely. Super important.
Mathew, so thank you so much for coming on today. How can our listeners learn more about you and your businesses?
So I have a YouTube channel at OCG Masters of Real Estate. And then I also have my website at MathewOwens.com with one T in Matthew, because my parents couldn't spell. So I say that all the time because that should have been two T's, but it's one T in Matthew. So
well, thank you so much for being on the show today. We will put all those links into the show notes, and looking forward to connecting with you here in the near future.
Awesome. Thank you so much for having me.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.